Hey, everybody, it's David Edwards with strategicwealthbuilder.com, and I'm here again today with Scott Christensen, CEO and founder of strategicwealthbuilder.com. And today we're going to talk about giving up that $5 daily coffee habit. And I can see you guys right now, some of you are rolling your eyes, but I'm telling you, it can literally have an impact on your financial future. And I'm not really asking you to give up that daily cup of joe. What I'm really saying is that, or suggesting, is that something as little as a little tweak like that, $5 a day, can really have a significant impact on your financial future. And so stay until the end of this video, and we're going to give you a tip that's super important and super impactful. So Scott, tell me, how can giving up $5 a day in coffee change somebody's financial future? A little tweak like that.
David, like you mentioned, more than likely, very few people are going to be willing to give up their morning coffee or energy drink. Yeah, well, their energy drink, which some of us, me included, they're probably not going to give those things up. But like you say, just a little tweak here and there, even as small as $5 here and there, can make a huge difference. Because in planning for your future, every dollar counts. And in the case of our morning energy drink expenditure, $5 a day, if you think about it, $5 a day amounts to about $150 each month. And over 12 months, that's $1,800. Over 5 years, that's $9,000. Over 10 years, it's $18,000. I mean, that's a pretty big chunk of money.
It's a lot of gains.
Yeah. And so if you applied an interest rate, I think, it's obvious. Money that you're spending on anything like that, once the money leaves your checking account or your credit card, so to speak, once that happens, that money is gone. It's not coming back. It's what we call a wealth transfer, meaning dollars that leave your control. You worked hard for them, you earned them, they came into your checking account, they were part of your paycheck, and then you spent them. You gave them to somebody else. And unless it's some type of an investment that you expect to return, those dollars are transferred away from you. And not only are they transferred away from you, but in addition to that, there's something we call a lost opportunity cost. And that goes back to what I was talking about earlier. Had you been able to invest $150 a month over any period of time and got any amount of interest, the interest is what we call the lost opportunity cost. So if you have $10,000 and it's sitting, in the bank at 0% interest, or it's in a sock in the bedroom or wherever you might have done something like that, if you're not getting any interest, that is money. There's an opportunity cost, and you've lost the opportunity to earn growth on that. And that's what happens with wealth transfers. Is they have an additional cost. So if you calculated $150 a month over a 15 or 20 year period of time, and then added interest to it, the number would be phenomenal. People ought to do that and take the time to figure out how much that would really be. But it's an astonishing number.
Yeah, so it does sound like my morning coffee could become a very expensive habit over time. And I remember a few years back sitting there with a friend of mine, and he was going through his check register, and his wife would go out with her girlfriends at lunch, and they'd go to Starbucks and they'd eat, get a couple cups of coffee, and she'd be a good friend, and she would buy coffee for her friend, a round of coffee for her friends, or maybe lunch for her friends. He sat there and he added up one month, and it was well over $600 that she had spent on the debit card, right? It was so they weren't charging it on a credit card, but still these habits that we get into and that we don't even think about how it's going to impact us over time. And so there's some other things, that we could do with that money that's going to help us see for the future. So talk to us a little bit about that.
Well, one of the things that we do with our clients is we help them understand that every day they're either unknowingly or unnecessarily transferring wealth away from themselves. And so we do a kind of a financial audit to help people identify and look at where are the wealth transfers, number one. But there's also another factor, and that's what we call financial inefficiencies. And simply put, that is, where are you spending a dollar that it it's not getting you the highest value. It's not creating the most benefits or maximum benefits. And in some cases, we can show people how they can take $1 and employ it in a particular fashion so that it creates multiple benefits for them. All this enhances what we call this financial inefficiency, or it enhances financial efficiency, I should say, which means you get to keep more of your dollars. And the more dollars you get to keep are more dollars you can reemploy into saving and investments that will grow to your benefit as opposed to someone else's.
Okay. So you're talking about redirecting that cash flow, eliminating debt, building up capital. If I'm doing all these things, where typically is the best place to store that capital? Should I be putting it in my savings account? I mean, that doesn't make much sense because, last I checked, it was like 0.5%. And I always find it amazing that, the bank will only pay 0.5% on your savings account, yet they'll turn around and lend that money right back to you on a credit card at 18 to 27%, I think was one of the rates that I saw recently. So where would you suggest to our viewers that they store that capital, that pool of capital?
Well, this is a very important question because here's the thing. People are at different stages in their financial journey, and sometimes they need to build up an emergency fund. Sometimes, some people are putting their money towards a health savings account, or they're putting it into a 401k. There's lots of different places that people can put money. So depending upon what stage they're in, where they're at financially, do they have some credit card debt? Are they financing vehicles? Do they have student loans? Where are all the cash flows? Where are they going? And so when we help people identify where the cash flows are going, we look at ways to make sure that those cash flows are working to their advantage. But then again, depending upon where they're, what stage of life they're in, we'll determine, is it important to build an emergency fund? And I'll give you kind of a simple example. Most everybody has an emergency fund today. Right. You say, well, I know lots of people that actually don't. And I say, well, yeah, they do. They've got plastic in their pocket. That's their emergency fund. Okay. And for better or for worse, it can solve a lot of problems. If you have a challenge right now today, you can get it taken care of, and you don't have to wait. You don't have to go to the bank. You don't have to wait to get funds from somewhere else. You don't have to pull it out of any other account. You can put it on the credit card. Now, the challenge is that from that point, you begin to accrue interest. Well, what if you had designed a system whereby things were more efficient and you still use the credit card for the efficiency of it, but you had the capital stored somewhere that was liquid, where you get at it. You had liquidity, use, control, which is something we've talked about in other videos, having liquidity, use, and control. So let's say I have a $2,000 vehicle repair or something like that. The reason that comes to mind, I just talked to someone that had $2,000 of fixing things on their car. So $2,000 vehicle repair. They put it on the credit card, all right? Now, when they get the credit card bill, if they have the cash that they can transfer from wherever it's at into their checking account and pay that bill off, then they don't incur the interest. Now, here's what's interesting. So we avoided the interest entity to the credit card company, but we had money in a place that hopefully we were getting more than 1 or 2% interest. Let's say we were getting 5% interest. So we gave up $2,000 that we could earn 5% on, and over the course of a year, that would be not a lot, but we gave enough so we could save ourselves the credit card expense. That's a good exchange, but did give up $100. There's a lost opportunity cost on the money. We saved ourselves maybe $400 or $500 in interest, but we gave up $100. So again, looking at things from a financial efficiency standpoint, is there anything else that we could have done differently that would be a game changer? And one of those things that we teach people about is something called the family banking system, which we're not going to get into detail of that today, but essentially what we do is we teach people to recapitalize their banking system, meaning that savings account, that capital account had a couple of $1,000s in it, maybe more, but at least had $2,000 in it. We're going to put that $2,000 back, but we're going to pay ourselves the interest that it could have earned. Now, for some people, they're going to go, gosh, that just sounds crazy. Why would you do that? You need to understand a lot more about the whole process of money and why the financial institutions do the things that they do and why you should understand that and then do some of those same things for your benefit. And so that's something that we really help our clients with. Financial inefficiencies, lost opportunity costs, wealth transfers, and redirecting cash flow. These are all part of what we try and help our clients understand to move them ahead far more financially effectively than anything that they've been doing in the past.
Okay.
Institutions and products and services to work for them rather than against them.
Awesome. So a couple things that people can do if they want to learn more, right? They can go to our YouTube channel, Strategic Wealth Builder. They can also go to our member website, which is free for people to become a member, and that's members.strategicwealthbuilder.com. We've got links below and on the ticker. And so we would certainly encourage you to do that if you want to learn more about the things that we're talking about today. Scott, anything else you want to add to that?
Yeah, one last thing, and we're trying to make sure that folks have as much information as possible. And I wrote a short book. It's easy to read. It's called Financial Certainty for Life. And what I wrote it with the idea of helping people understand that there's some challenges in this new economic future that we're living into. There's some things that we're going to have to know and understand and work through going forward. And if you don't know about them, you can't plan for what you don't know about. You don't know what you don't know. And this book is designed to teach you some financial things or some financial challenges that are coming up that we need to know about. And so if they click on one of the other links below, they can get access to the book. The book is free. We'll be happy to pay the shipping. And then the one other link that is also available is that we would love to have an opportunity to visit with those who are listening or viewing this particular video. We offer a free 30-minute, no obligation consultation. We can talk about where you're at, where you're trying to get to, what some of the struggles and challenges that you're facing, and we can get you set on the right path to moving forward financially. We would love for people to schedule that consultation, and we'd love to be able to help people, because that's, at the end of the day, that is the bottom line. We are trying to make a difference for people in this country financially, and we believe we've got some very good financial education information that will help do that. So looking forward to it, David.
Absolutely. Well, until we get together on the next show, Scott, have a great weekend, and I'm going to get out and do a little fishing.
Thanks, Dave, for taking the time, and look forward to talking with you again.
All right. Everybody have a great day. Take care.
All right. Bye-bye.